It's Friday, March 6th, and the next financial crisis may already be starting. Oil is ripping higher, with the war in Iran escalating. Traffic through the Strait of Hormuz has basically stopped. Meanwhile, the Dow just dropped 1,000 points in a single day. And at the same time, private credit, the $1.8 trillion shadow banking market, is starting to crack. BlackRock is marking down loans to zero that were 100 cents on the dollar just a few months ago. And investors are trying to pull their funds as fast as they can, with no luck. Former Goldman Sachs CEO Lloyd Blankfein is warning that the private credit market could trigger something like 2008 all over again. But that's not the story you're hearing. The real problem isn't oil. It isn't war. It's debt. And the West is entering what Luke Gromen calls a sovereign debt spiral. And when that happens, the entire system begins to change.
Yeah, I think within 10 years, I think Bitcoin's price in 10 years is way higher.
Private credits break, banks pull back, governments intervene, and something new replaces it: digital credit. This is Dante Cook with Bitcoin Simply, and we've got a lot to break down today. Let's go. The Strait of Hormuz. What is it? Well, about 20% of the world's oil ships through these lanes. And right now, traffic is nearly stopped, which has caused oil to go above $80 a barrel. But I told you this on Sunday. European jet fuel prices have risen 71% in a single week. And most people look at that headline and think it's an energy story, but it's not. It's an inflation story, a transportation story, a food story. Think about all the things connected to the oil itself. And when energy spikes in a late economic cycle, it causes stress throughout the entire system. And that's where things are starting to break. The Dow Jones dropped 1,100 points the same day that oil crossed $80 a barrel. Gold just hit all-time highs at $5,100 an ounce, and treasury yields are climbing. China, Japan, and US bonds, the 10 years, are moving higher at the same time, like in a coordinated fashion. 4.1 for the US is the highest since 2007. 1.8 for China, the highest since 2007. 2.2 for Japan, the highest since 2007. This is an extremely rare combination which signals one thing: stress in the entire financial system. And when stress rises, the weakest parts break first. And the weakest part clearly right now is private credit. This market exploded after 2008 when the banks pulled back from lending. Large asset managers stepped in. The private credit market today is roughly $1.8 trillion, and it's crashing on a dime. Here's the problem. The assets are opaque. The leverage is hidden, and investors' money can't be pulled out easily when they want it back. And now we're seeing the first cracks. BlackRock is one of the leaders in private credit, and they're writing down loans left and right. Blackstone, not BlackRock, their flagship private credit fund, has had $1.7 billion in redemptions in the last several weeks, and they're shutting the doors. And Lloyd Blankfein, who was at Goldman Sachs during the Great Financial Crisis, says this looks a lot like the subprime mortgage crisis, when banks and other asset lenders wanted their money out while they couldn't get it out. And we've seen this movie before. It reminds me of the scene in Margin Call, where John Told says, "I can't hear a thing right now." The dangerous part is we've seen this before, and there's been so many people that have been promised 4 and 5% returns to these private credit funds. And this is exactly what Michael Saylor predicted. These funds were going to experience stress. People are going to want their money out, and they're not going to have an opportunity to get it. And this is exactly the market he's positioning for with Stretch. And this is the beginning of digital capital.
Competing with under-collateralized junk bond issuers that are going out of business in 6 months that are offering you 5% yield, and somebody's buying that garbage, right? And so, at some point, really distressed credit issuers or illiquid private credit, they will find it harder. Look, now, nobody's going to stop buying T-bills because of this stuff. You don't got to worry about that. We're not competing with the U.S. government. We're competing with the marginal borrowers issuing illiquid, low-yielding, tax-inefficient junk bonds, high-yield bonds, private credit, and other types of garbagey credit instruments. And then the ones that sell things over the counter that you can't legally buy. And we're actually making it available to you. So who wins? The world wins. The digital asset economy wins. Everybody wins. And how big is the market? Well, there's $300 trillion of garbagey credit right now. And it's probably going to double over the next 10 years. So if you can get 5% or 10% of it, there's a $50, $60 trillion opportunity.
But this isn't just about the private credit market. That's the first thing that begins to show weakness in the entire system, sort of like Homes in 2008. And Luke Gromen calls this the sovereign debt spiral. Governments around the world have accumulated enormous amounts of debt. There's almost $300 trillion worth of debt in this system. The United States has a $38 trillion deficit. Interest payments are rising faster than tax revenues, while the consumer has less and less money to pay for taxes. Boomers are leaving the economy, which is the #1 tax base for the United States government. And so this forces governments to do one thing: borrow more money from the future to service old debt, which leads to money creation, which leads to inflation, which leads to currency debasement, which leads to intervention. This is why the energy prices are soaring. This is why gold is soaring. The system is unstable. The math simply doesn't work anymore.
Kind of coming back almost full circle to where we started with the Iran stuff, where what, because you just made me think of this with the debt and what's going on here, but we have debt jubilees. Like how does this stuff get sorted out in the long run? Like whether it's, like you said, the Fed balance sheet is going to just rocket, with AI and all the things that are happening. Is there, does this just melt and go away at some point? Do we go to global war? Is it a debt jubilee? Or are people taking the hit and saying, yep, I'm short selling my house or short selling it. Sorry, country, you're going to take the hit. What ends up happening in your mind?
Oh, you can't have a debt jubilee with a debt-based system like this because the debt is everybody else's asset. So it's ultimately the system has to get fully reserved. In other words, they have to create currency units that mostly or entirely back all the debt outstanding. And, that's how this ends. That's unless you get some sort of productivity miracle that not only is massive, but is massive and doesn't arrive too fast so as to enforce deflation and blow up the very same debt system. And I think that is the case of AI. It's too fast, but we'll see. Failing that this Goldilocks productivity miracle that I think is almost, threading a needle, they're going to have to fully reserve all the debt.
But the same thing is happening at the same time. The financial system is adapting away from the old system and towards a new system. US regulators just issued guidance that tokenized securities can receive the same treatment as traditional securities on a balance sheet. Translation: Wall Street and other firms such as Tether and Kraken just got permission to move trillions of dollars of assets onto the blockchain. And this comes at the same time as Kraken, one of the largest crypto firms in the world, getting access to the Federal Reserve payment system. Think about that and the implications of what that means. But they're going to create all of these synthetic products that don't have any scarcity. And eventually the world is going to realize, just like it has in the past, we need scarce, desirable assets that cannot be manipulated or debased. And that's Bitcoin. One of the ways that institutional finance has already come to Bitcoin is through a company called Ledn. They allow you to borrow against your Bitcoin with the most institutionally grade and secure product that is actually a credit rated instrument that allows you to borrow up to 50% loan to value in your Bitcoin, which means if you've accumulated a lot of Bitcoin, don't sell the Bitcoin, borrow against it in fiat. The money comes into your account in less than 6 hours, and the application just takes 2 minutes. The rate started at 12.4%, which is half of what you could get for a traditional credit card. And you can repay it anytime without penalty. If you stacked a lot of Bitcoin, it's a no-brainer, and especially if you do it responsibly. Go to learn.ledn.io/simply to get started. One of the ways you can continue to become sovereign in your Bitcoin journey is by becoming your own bank. You can do that by running your own node, managing your own keys, setting up your own channels, and ensuring your families and loved ones know how to operate this sort of technology. But that can be hard to do, and a lot of people have probably already tuned you out because you talk about Bitcoin all the time. Well, get a coach from the Bitcoin way, someone who's an outside perspective and outside voice who can talk specifics about how to do this privately, safely, securely, and so that you can have confidence that you're sovereign and secure when the system collapses. Schedule a free 30-minute consultation with the team at thebitcoinway.com/Dante. Dante. Let's take a step back and look at what's happening across the economy. Let's look at Oracle, a massive tech company. They're going to have 3,000 cuts or layoffs. What about Morgan Stanley in the banking sector? 2,500 job cuts. What about Discover, who was just acquired by Capital One, which now is just being told in less than a year, 1,100 employees are being laid off. At the same time, you see home sales plunging. And at the same time, you see record numbers of people tapping into their 401ks to pay for emergency expenses. These are classic late-stage signals. The system is slowing and we are at the end of a cycle. The pressure is building and nobody wants to say this thing out loud. The global financial system is collapsing. It's masked by war, inflation, high energy prices, but ultimately, it's the end of the system that is breaking and can no longer work and continue to function in the same fashion that it has in the last 50 years. And that's why people are hedging their bets with Bitcoin. It is an alternative system that the new system needs to be built upon if we want to have any semblance of control, of scarcity, and a lack of currency debasement. The debt will have to be reserved and backed by something. And that something is Bitcoin. We're moving to a world of open networks, digital collateral, transparency. Bitcoin sits at the center of that shift. The new financial system won't arrive because people want it. It will arrive out of necessity. That's how all of these systems play out. And you're going to be ready when that does happen because you subscribe to the channel and you listen to Alpha like this 7 days a week. And it's because you find multiple ways to stack Bitcoin, not just buying spot Bitcoin, not just borrowing against that Bitcoin you stacked versus selling it or lending it out to someone else, and by becoming your own sovereign bank, but also because you stack Bitcoin through Bitcoin mining. You outsource it to the experts at SAS Mining, who will help you find the right machine, who will keep it up, who will repair it, who will make sure that it's up 99.9% of the time. All of these sorts of things is what you want an expert to do and not out of your own basement. Use the QR code to get started with SAS Mining today. This is Dante Cook with Bitcoin Simply. Happy stacking.